Differences between accounts payable and trade payable. Accounts payable versus trade payable. Accounts payable is the total amount a company owes to its creditors for goods and services. Whereas, trade payable is a subset of accounts payable specifically for goods purchased on credit from suppliers. The purpose of accounts payable is to ensure suppliers and vendors are paid for the goods and service required by the business as efficiently as possible. Whereas, the purpose of trade payable is to ensure the obligations incurred by a company during its operations that remain due and must be paid in the short term. The scope of accounts payable is broad and includes payments owed for services, utilities, supplies, and other operational expenses. Whereas, the scope of trade payable is narrow and refers only to amounts owed for the purchase of goods meant for resale or manufacturing. Typically, short-term liabilities, usually due within 30 to 90 days for accounts payable. Whereas, usually short-term liabilities as well, often with terms of 30 to 60 days for trade payable. The impact of accounts payable on financial statement is that the accounts payable is recorded as a liability on the balance sheet, reducing working capital. Whereas, the impact of trade payable on financial statement is that trade payable is recorded as a liability, but more specifically tied to inventory and cost of goods sold. Accounts payable focus is to covers general operational expenses. Whereas, trade payable supports purchasing goods for the core business, such as raw materials or stock for resale. Example of accounts payables are rent, office supplies, insurance, utilities, services like accounting or legal. Whereas, example of trade payables are payments to suppliers for raw materials, inventory, or goods purchased for resale. Kindly subscribe my YouTube channel Thesis Helper. Thanks for watching.